Welcome to the Protos Podcast. Today's date is Friday, the 17th of September, and you're listening to a weekly roundup of the most important stories from the past week as reported by us. This week, we congratulated ciphertrace on joining Mastercard's stable of crypto-related brands, went deep on Coinbase's plans to offload $2 billion in junk bonds to some of the world's top investors, and got an update on Dwyer's legal situation as the so-called BitMEX 4 get ready to head into court next year. We kicked off the week with the news that Mastercard has agreed to purchase crypto analytics firm ciphertrace. The multinational payment giant paid an undisclosed amount to seal the deal, which it says is in a bid to move deep into the field of digital assets. According to Ajay Bala, Mastercard's cyber and intelligence president, the crypto economy's rapid growth needs investment to keep everything nice and secure. And a blog post posted on both ciphertrace and Mastercard's website echoes that sentiment and pictures the acquisition as Mastercard's way of building trust in crypto. Ciphertrace currently tracks over 900 cryptocurrencies and is backed by the US Department of Homeland Security. It also supplies data to over 150 financial institutions and government agencies, and last month became the first to offer tracing of privacy-focused crypto, Monero. The company's cutting-edge visualizations tools allows banks and law enforcement to identify when Monero transactions are likely to have come from criminals. Mastercard's acquisition of ciphertrace is expected to close by the end of the year, pending certain conditions, of course. The company will join Mastercard's portfolio of crypto stakes alongside exchanges Uphold and Gemini, as well as payment processors BitPay and Wirex. Next up, Coinbase is looking to offload $2 billion in junk bonds to the world's top institutional investors. The top US crypto exchange is looking to sell two bonds, a 10-year with nearly 5% yield and a 7-year with near 4% as it tries to raise funds. This isn't the first time that Coinbase has sold bonds, having previously raised $1.25 billion with convertible bonds earlier this year. FYI, convertible bonds are a form of corporate debt that transform into standard equity at a set price. In fact, US companies are on track to set a 16-year record for junk bonds, with over $316 billion worth reportedly sold by the end of July. This is up more than 30% from a year earlier. Still, Coinbase's latest debt raise comes as its share price is firmly in the toilet. Shares in the Delaware-headquartered firm have fallen almost 10% since disclosing the US SEC plans to sue over its proposed interest-bearing crypto accounts. Coinbase stock is also down nearly 30% from its direct listing opening price in April, and 45% down since its peak, set only hours after. Coinbase insiders have offloaded close to $5.5 billion worth of company stock overall and $250 million in the past month. The Wall Street Journal recently reported that by the end of June, Coinbase amassed a $4.36 billion war chest to help it ride out the impending crypto winter and potential regulatory crackdowns. The exchange's potential revenue is inherently tied to crypto trading volumes, which, as we know, can be fickle. So, Coinbase's junk bonds are poised to help bridge the gap should they drop. Recent bull runs boosted Coinbase's profits to $1.61 billion in this year's second quarter, up from $32 million in 2020's equivalent. Next up, the embattled cryptocurrency exchange BitMEX is back in the news after its first ever employee, Dwyer, agreed to an extradition request from a New York court. Dwyer, accused by the US Department of Justice for breaking the Banking Secrecy Act, is the last of the so-called BitMEX 4 wanted by US authorities. Ben Dello, Arthur Hayes, and former CTO Samuel Reed handed themselves in earlier this year, while Dwyer has been sunning himself in Bermuda. However, Dwyer's lawyer says he intends to defend himself against the, quote, meritless charges from the DOJ. Dello and Hayes both pleaded not guilty to breaking anti-money laundering laws and violating the BSA. They were released on $10 and $20 million bonds, respectively. As for Samuel Reed, police arrested the former chief technical officer in Massachusetts shortly after going public with the charges. He's now out on $5 million bail. Authorities allege execs intentionally left BitMEX open to money launderers and traded against customers to mitigate losses. According to the DOJ, Dwyer was complicit in, quote, failing to establish, implement and maintain an adequate anti-money laundering program, including an adequate customer identification program. The trial against the BitMEX 4 is set to begin in March next year, with each of their charges carrying a minimum sentence of 5 years in prison. And that's your lot. Thank you for listening. We hope you enjoyed this week's episode, but we realise there's only so much we can cover in one episode. So if you want more of the stories that matter, then check out Protos.com. And don't forget to subscribe to the Protos podcast on Spotify, Apple Podcasts, or any other major podcast provider for more weekly roundups. We're back next week. See you then.